are back. Man, it is that time. It is that time again. Woo! All right. This is it, baby. All right. I hope this room is set correctly. Welcome, everybody. Anyone on Clubhouse can join. Okay, wonderful. Today. All right. Okay, we're about to get this started. All right. I want to welcome everybody to the Stock Market Show. Welcome to Brooklyn Traders. I am your host, Charles Becco, and this is your number one source for technical analysis on the stock market. We are live streaming via Clubhouse, Facebook, YouTube, and Twitch. Please follow us at brooklyntraders.net, YouTube, and Facebook. And if you enjoy this content, don't be afraid to give us a like, share, and subscribe, yada, yada, yada. And it is time to go. All right. Now, let me get some links up here. Okay, so on you guys on the Clubhouse, right, we're going to get you a link to the show. Just give us 1 second, and we'll get that link to you properly. We've got so much to talk about today, and here we go. We have Helen. Boom. Boom, boom. Team, I want to welcome everybody. I want to welcome Helen to everyone. Helen, please introduce yourself to the crowd. Go ahead, Helen. Tell everybody about yourself.
I'm an active trader. I open a clubhouse 24/7 during the weekdays from Monday to Friday. So normally Saturday and Sunday I will take a break. We trade stocks actively. So we have been very successful in the past because I opened in March 6th. So it's been 15 months, and a lot of people see how many followers I have 8,000. So yeah, we have fundamental analysis, we have microeconomic analysis, we have chart, we draw chart every day. So the chart, how can I call it? Chart or chart?
Oh man.
Which way you like?
Oh, hold on. Oh, sorry, I was getting the links together. You can call me Charles, or some people say Chart Master Charles. I don't know. Whatever you feel comfortable with. Just not Chuck, because it rhymes with the other word. I'm not going to say it. Just Charles.
Chart. Yeah, I like chart.
Yep. All right. And so today, team, let me get the links up right now. I'm using a new version of Clubhouse, so please forgive me if I'm not sure how everything works. Okay, I think that's it right there. Boom. Okay, there it is. The link is at the top of the room here on Clubhouse, right? And we want to answer 2 questions today. Well, number 1, can Tesla save the stock market? Can Tesla save the stock market? And Bitcoin at 13,000, Brooklyn Traders' most aggressive call out to date, right? Some people may call it crazy. Okay, so the YouTube link is live, and we want to go live for everyone on YouTube. There you go. All right, boom. All right, so I do want to start the show off by talking about some of these charts that you see here on screen. Okay, if you do not know what I'm talking about, just click the link up above in Clubhouse, and you'll get right to the YouTube. The same thing is also streaming to Facebook and Twitch, so you Facebook and Twitch people already know what I'm talking about. Okay, so on the screen here, we have 4 charts. These are the market internals that we study every single day, almost minute to minute here at Brooklyn Traders. the one to the top left is the one that we want to focus on, called the put-call ratio. The put-to-call ratio in the market. You could have that per particular instrument, but I'm looking at one that's index-wide. And the put-call ratio, typically speaking, right, is usually at a mean of about 0.50, okay? That's about the mean. If it's below that, it's very bullish. Above that, more bearish, right? Typically, once you get to a 0.9 or 0.99 or 1, that is extremely bearish, but it's actually so bearish, right, that it can be interpreted as bullish because there's just so many bears in the market. Sort of the idea of the crowded trade. Now, this is where we are. That happened last Friday. For the very first time in I don't even know how long, the put-call ratio hit around 129 or something like that. Let me see. 128, 1.28. Okay, so it seemed like everyone and their mother was short the market, right? But as you can see from how Friday played out, right? We kind of started out very, very bearish, right? But then let me just get the QQQ chart up here. Okay, let me go to the 5-minute time frame. Give me 1 second. Yeah, but we started out kind of very bearish, right? But then as the day went on, we went from being very bearish to very bullish, right? Or not, I can't say very bearish. We went from bearish, right, to bullish. Okay. So this kind of is the one half of the reason why we say maybe, potentially, why tomorrow may be has a higher chance or higher likelihood of being a bullish day, right? Because there was just so many people short on Friday that there's no bulls to kind of go and take the other side of the trade. Okay. And so there you go. Okay, so this is the 5-minute on the QQQ. Now the other half of it, right? If I could get my stuff up here, okay, is Tesla. Helen, could you tell us what happened with Tesla over the weekend?
Yeah. So the European Union, they have announced they passed let's see, what's it? They call the European what is it? The European Union, whatever the organization. They passed they haven't finally passed, but it's on the way. It passed several steps already. It's going there. So they're gonna ban the gas cars. You cannot sell any one new gas cars from 2035, same as California. So you can sell the used cars, and you can still drive used cars with gas cars, but you cannot buy any new gas cars, which means it's a very good bullish news for the electric vehicle industry. And also in China, during they have a 2-month shutdown in lockdown in Shanghai. So they just opened about a couple weeks ago, I would say. So basically the electric vehicle sector and also all the cars, the EV number is 150 year-over-year increase. The month-over-month increase is about 54% for EV, and same thing as the gas cars, but it is a little bit less probably because they are promoting EV cars crazily. The EV industry, the market was occupied, dominant by China because they wanted to surpass U.S. by using electric vehicles, this industry. And basically, United States are far behind. We are far behind with China. We are far behind with Europe. So we are still catching up. And Biden has promoted this industry since he was on office, right? So you can add some points.
Yep. So thank you so much for that, Helen. For any of you who just joined in, just to reiterate, Ellen just mentioned that pretty much that in the European Union they voted to ban gas cars by the year 2035. Thank you so much for that, Helen. Also, we also want to announce Tesla announces 3-for-1 stock split here. Okay, story courtesy of Yahoo Finance's Praz Subramanian. All right, just going to read it verbatim. Tesla announced in its proxy statement released late Friday it will seek shareholder approval to split its stock 3-for-1. Shareholders will vote on the proposal at Tesla's annual meeting on August the 4th, which is less than 2 months from now. Tesla shares rose as much as 3% after hours on Friday following the news, and shares fell 3.1% during Friday's regular session. Okay, so we've got a few nuggets of bullish news for Tesla and the EV market that definitely, I believe, will have an effect on the overall market tomorrow, right? And so we have the bullish and bear case, okay? The overall, right? If you guys remember and caught the last show, okay, I made some pretty big bearish call-outs, which may have seemed a little outrageous to some when I made them last week, especially considering that we were in the middle of a rip-roaring bounce back in the market, right? But as you can see, okay, from where we were last week, which is handily above 305 and even hitting 310, we have since reversed back down to the multi-week lows of $288 on the Qs, all right? Again, if you look at the greater and the bigger chart, okay, max, we are heading under on the monthly time frame on the Qs, right? We are heading under the monthly, okay, 34, and we have the beginnings of what may be, again, just a season of bearishness, okay, as the monthly 21 looks to pass under, the monthly 8 looks to pass under the monthly 21, and again, we're going to maintain our price targets on Qs, okay, which is going to be 275 and 250 in the short term, and ultimately 200 in the longer term, right? So we're talking about month to month, possibly even within the year, okay? Maybe years from now. I would say within the year. My humble opinion, doesn't have to happen. I do want to point everyone's attention to the lines in the chart here. And again, if anyone just tapped in here, just please go to the link above, okay, to go to the YouTube. That's also on Facebook, and you can see the analysis. As a matter of fact, maybe it is time for a quick refresh, okay? Give us a second while we just refresh the room, reset the room, okay? Again, welcome to the Brooklyn Traders Stock Market Analysis. My name is Charles Becco, and I'm joined by Helen. Today, we will go over the technical analysis of the stock market, and we are live streaming via Clubhouse, Facebook, YouTube, and Twitch. Please follow us at BrooklynTraders.net, at YouTube, and on Facebook. If you enjoy this content, please follow us on all platforms. Okay, also follow myself and Helen. Also, don't be afraid to send us any donations via Clubhouse or YouTube if you see fit. Boom. Now, back to the show. All right. Like I was mentioning, right? If you look at this chart here, right? You see all these dotted lines here? You know what these are? These are actually open gaps on the daily time frame, right? And I know this chart looks ugly. I know. It looks absolutely disgusting, right? You're getting sick by looking at it. But this is some pretty good stuff, right? Let me actually remove the RSI here because we don't really need it. Let me see if I get some more real estate to work with, yada, yada, yada. See if I can make this look a little bit more palatable on the eyes here. Okay, yeah. All these other lines are open gaps, and we've got gaps open from 174 near the pandemic lows. They do say that most gaps close, and just look at how many gaps that we have, right? If you look at these purple or violet colors up here, these are previous gaps that were open that have since now closed, right? So the next gap that is open is right there at 275. Helen, question: what are your thoughts on the QQQ? Okay, in the short term and in the longer term. Helen, please.
Yeah, so because the CPI number came out on Friday, it was not looking good because the Fed, they were predicting like, they are saying like, in the beginning, like January, before January, it's transitory. And then they said they might peak, because they see March number was 8.5, and then April number was 8.3. So they are hoping this month is going to be 8 point whatever. It's going to be lower than 8.5 at least, but it's even higher than March. So this is, kind of bad surprising. It's like very bad surprise. So I would say they cannot be dovish for sure, but they could be hawkish, but how hawkish then they go? So we will keep eye close on, very close to watch on Wednesday. They will come out to the result, the meeting result will come out 2 o'clock, New York time, and 2:30, Powell is going to make some speech. So I will pay a lot of attention for that because, the market is, I wouldn't say this is bottom. It's too early to call it bottom. And based on the charts from Friday and the Thursday, it looks like they're kind of going, downside a little bit. And then I don't think the big institutions are going to put big money in before the FOMC meeting on Wednesday. So the volatility is going to be high. But I wouldn't expect a lot of volume Monday and Tuesday, but Wednesday is going to be big volume and big volatility. How do you think?
Oh, thank you so very much, Helen. Thank you so much for that reminder. And so, so Wednesday, okay, Wednesday, okay, will be another potentially violent day, right? Because the Fed will have their FOMC committee, and they're going to come out with some of their rate decisions, right? Nobody knows what they're going to do, but I'm going to be a little bit slanted bearish again. Starting last week from our previous Clubhouse show, we were very bearish, and we went over painstakingly all the reasons why we were bearish, and the week did turn out that way. I think going into Wednesday, I do expect some kind of bearish continuation. However, we have seen in the past, the Fed day, right? Regardless of whether they come out as bearish, as coming out as dovish or hawkish, right? For whatever reason, last couple meetings, the market actually had some kind of positive reaction, right? Where it was like immediately after, I don't know if they kind of gravitate to something that Fed Chair Powell was kind of vague on, or just something that they could interpret as being dovish. For whatever reason, again, I believe the last 2 times that there was kind of Fed statement or the FOMC, the market actually had a positive reaction to whatever was said, and we did have an update. But as usual, right, it's not the day that whatever the policy statement comes out you have to watch out for. It's usually the day after, right? And so, again, it was like clockwork. The last 2 or 3 meetings, or last Fed statement or whatever, there's a comment, there's a first reaction, follow-up reaction, and the dominant reaction for the day. And the last couple times it was bullish, but then the next day you did see a bearish reversal. And let's be honest with ourselves, right? Inflation is at like a 30, 40-year high, gas through the roof. The price of just commodities, wheat up 70%, chicken, just anything, any kind of utility that you have, okay, including rents, everything is rising, right? Even wages, right? Wages are incrementally responding to the effects of inflation, right? And so, what could the Fed do? Especially against a backdrop where the stock market is at a dizzying high, right? A dizzying high, What do I mean by that? Well, let's just go over. Again, this is gonna be the one part from last week's show that I'm just gonna go over again because you guys need to see this chart, and it looks really wild. It looks really, really ugly. Okay, let's just go back. Okay, if you guys listen to some old R&B songs, there's a song that starts out that says like this. It says, "Let's go back, way back at the time," right? It's called "Don't Leave Me Girl" by Blackstreet. Boom. See, I just let you know my age a little bit, all right? Okay. So if we go back, right, and this should be a very scary chart for you. You know what this is? This is the 2000 stock market crash, right? And what this basically says is that where the 200 simple moving average was in the monthly time frame to where the price peaked at, the difference there was 218%, right? Basically, price was 218%, okay, above its 200 simple moving average back in the 2000 crash. Now look at where we are today, okay? Price hit a high of 348%. 348% over its monthly simple moving average. In other words, we are at a dizzying array, sickening valuation, okay, for the stocks in the stock market, way more so than even the 2000 market, okay? And I'm anticipating a 2000 style market crash, maybe possibly even worse. Okay? So again, here we are, right? And if you just look at this monthly time frame, look at it. Just look at that. Okay? This is 2000. This little blip right here is 2008. This little divot right there is COVID, and this is where we are right now. Okay? That's where we are right now. Okay? Before we go any further, I do want to give some of the audience members, okay, an opportunity to put in the chat the tickers that they would like to have seen broken down, okay? We will go over all of the FANG names next, okay? But we do want, again, the audience members to have an opportunity to have their tickets broken down, okay? If it's too many, we will cut the list short, but, you know, let's see, all right? Let's do a quick reset of the room. Actually, before we get to a reset, Helen, any words of response as to this market versus the 2000 stock market? Do you agree? Do you disagree? Do you think we could go to all-time highs before we get to the next crash? Go ahead, Helen.
I don't think today's market is comparable with 2000. It might be comparable with 2008 and 2018. Because 2000, I was first, the tech companies, they are not mature. They're just like baby. They're taking baby steps. So when some big wave, like financial, whatever crisis, it's not financial crisis, it's high-tech crisis. They hit the high-tech companies. They're like the baby. You hit baby just fall down. But right now, the tech companies, they're pretty mature now. So I would compare with this market with 2000. And also, this time, the Fed and all the Biden administration, they are planned, they're organized for this drug. You know, from 1800 to 4800 to 3800. It just, you know, it took down every single step, 200 points. They're organized. And once they hit 3800, May 20, they hit 3810, which means because if you times 0.8, 20% down from the highest point, 4800, 4818, 18, so the number came out 3854, let's say 3850, roughly. So on Friday, that was May 20th, so that guy, his name Bullet, he came out and said, oh, we're not going to do QT anymore, 2023, 2024. We're going to QE again. Then market stopped bleeding. The sentiment changed from very steady
Yep. Yep. Indeed. Indeed. And again, when we look at the SPX here, again, I do see an opportunity for a little tiny bounce here in SPX. Not only as we go to previous support levels around 3,800 and below, but the 8 is over the 21 and 34, right? So technically speaking, we are kind of set up for a potential bounce in SPX as well. Seem more like a relief bounce, but let's see. So again, thank you, Helen. Okay, so let's go on to the reset so we can let folks know what is going on here. Again, I am your host, Charles Becco. Welcome to Brooklyn Traders, your number one source for technical analysis on the stock market. I am joined on the stage with Helen, and we're talking about Tesla today. We want to get to Bitcoin, and before we go any further, we would definitely like to thank our audience members for joining us here today. Okay, live streaming via Clubhouse, Facebook, YouTube, and Twitch. Please follow us at YouTube and Facebook, and check out our website at www.brooklyntraders.net. If you enjoy this content, please follow myself and Helen, and don't be afraid to send us any donations via Clubhouse or YouTube if you enjoy this message. Boom. So now we will go down to break a couple tickers. Okay, we're going to break a couple tickers down from the audience, right? So far, we've got Tesla on deck. I see LCRX, ZIM, AMD, and as my son says, Apple. Boom, Apple. Okay. 1 second. Give me 1 second. Give me 1 second. Just want to make sure I get my stuff together. And boom. All right. Main screen. All right. So first things first, let's go to Tesla. Okay. So if you look at the daily time from Tesla, right? Okay, we did have, technically speaking, some good news, right? You had the 8 passing over to 21, okay, in a big way, okay? But, we were kind of dragged down by the market. We are not necessarily getting a nice and clear signal from the MACD. I mean, it is kind of weakening up. But I would say we were making higher lows, right? But that's not the case as of Friday's price action. But let's see here. Let me just kind of get this here. Let me just get the right study. Okay, pretty cool. All right. But yeah, we are seeing here that technically speaking, we could go for a bounce in Tesla, but better than that, Tesla just announced a 3-for-1 stock split. I'm anticipating Tesla to be firmly above 700 come Monday, tomorrow, June the 13th, 2022. So price targets on Tesla. Let's see. Okay. Just going to go with the EMA targets here. I'm looking at 717, 733, of course, 750, and $800 on Tesla. Okay. We have no idea how high or how low Tesla could go. We know that it's moved big to the downside within the last couple of weeks. Let's see if we could also move big to the upside on Tesla for tomorrow. Okay, so that is Tesla. Helen, I know that you played Tesla pretty well this week. Any thoughts on Tesla, technically speaking?
If you look at Tesla, when they announced split in 2020, August, I think it was August sometime, the price went up 80%, but because that time was bull market, the Fed is basically QE, so all the stock went up. So it took advantage of the macroeconomic environment. But this time we cannot compare Tesla price flip at that level. I don't think so. But there is one stock we can compare is Amazon. They what I'm saying is in the bear market, it still has some bounce, when you announce this kind of good news. But after that, they went down like crazy, even lower than the level when they announced. What I'm saying, you could take advantage of this opportunity, but we will closely watch it because I remember the sentiment was very low when Amazon announced this news for speed. I was thinking, okay, this might be a very good time to save the market because they wanted to. All the big tech companies, Amazon, they announced the split and the buyback. Apple buyback 20 billion. Facebook buyback. Tesla split. Google split. They do all this to save their investors. Otherwise, the investors are gonna leave them away. So this is bear market. They wanted to do anything they can to save the investors. So I would say there might be some opportunity for Tesla. We will closely watch it. So basically, if you watch the VIX, right now on Friday, I saw it was 28. It's not time to buy the bottom because it's not bottom. I would say normally, if you watch the historical data, the VIX, I would just buy when they are like 36 around that area. So we have still 1 or 2 steps down, I would say. What do you think?
Yep, good observation there. I've been looking at the VIX here. Just pretty much keep above 25, and if you can see the chart, right, it's really bouncing off of its 200 pretty nicely here, and has been since the beginning of the year. So yeah, the VIX again at these elevated levels looks pretty dangerous, right? If we kind of stretch out the longer term chart, let's look at 3 years of the VIX here. You can see that it definitely has kind of like an arc here, right? From the again March of 2020, right, all the way here. We seem to have like kind of arced down, right? But now we're kind of arcing up again, all right? So yeah, watch out for the VIX there, all right? All right, so we've got a couple of tickers out there, okay? I believe is LCRX, which is one I have not looked at in a long time. Let's look at see what's going on with LCRX. Don't know what this is. What is it? Can't be a penny stock because I'm able to see the penny stock. So what's up with LRCX? Oops, my bad. LRCX. My mistake. Lam Research. Okay, cool. This is just a choppy chart. There's nothing here. There's no trend here. It's just like somebody just went to the screen and just scribbled all over it. If you like this, maybe let me look at the longer term chart. Seems a little bearish still, kind of reminiscent of the overall market, right, where you kind of had this uptrend, downtrend, the 21 pass under the 50, 8 pass under the 50 and 21, and all roads are heading, okay, on a longer term chart towards 400 and 376. So I would look for that on Lam Research. Next up on the list is ZIM. Okay. Oof. ZIM integrated shipping. Not sure what happened. This looks like some news-driven event. Broke the 50 here. Heading under to 48. So yeah, look out for below on ZIM. Not too sure what happened, but yeah, this is quite the breakdown on the daily time frame. 8 passing on the 21, which is bearish. 8 look like it's challenging the 50, which is bearish. If the 50 crosses under the 200, that'll be a very bearish death cross, right? And when those algorithms, they see that death cross, okay, they pounce for attack. So again, bearish on ZIM. And I do want to take the time here to mention everybody. Pretty much, we really like to follow just pretty much the SPY, QQQ, Apple, the FANG names, because pretty much whatever those tickers are doing, that's what the rest of the market is doing. If you're looking at ZIM or Lam Research, it's pretty much doing the same thing. I mean, if you're looking for anything to kind of break out, look at like consumer staples, and look at, energy, right? Look at energy, right? Again, These are the only things that are bucking the trend: consumer staples and energy. And even consumer staples look like heck. They do. Like, I mean, it's bad. I mean, dang. I mean, you really look at consumer staples to potentially give you some strength here, right? But man, even the consumer staples look not too great, right? But yeah, there you go. There you go. All right. So right now, energy looks like the only bastion of strength in the stock market. All right. So that's Tesla, LCRX, ZIM. Now we are looking at AMD, which again, don't anticipate for it to be much different. And no. Yeah, team, it's just not a buy to dip phase. I mean, fresh MACD cross down here on AMD on the daily time frame. Price, again, the price was good. You know, we were able to bounce. The 8 was above the bounce over the 21 and the 50, okay, which is good. 21 just bounced over the 50. But, man, you know, it just doesn't look good, okay? It is kind of mixed here, so I do see how potentially AMD could be above its 50, but, I mean, I just leave it like this, right? If price is above the 50, that'll be bullish. Price below the 50, and that's bearish on AMD, okay? Sorry, that's not exactly clear, but, again, I'm thinking AMD will probably at some point go back to test the 90 level there, but to the upside, right, I do see some overhead resistance at 100 and 102 on AMD. Do like AMD long term, though. Let's look at Apple. Apple sitting on top above a major support level here at 137. Okay, even since you know, the last year, you know, we kind of broke above 137, went down to test it several times, came down to test again and holding, right? So we're right back at 137. I do think we do see some kind of a bounce, maybe to 140, maybe slightly above, but I don't anticipate that bounce will be sustainable on Apple. You can even see here as the daily MACD looks like it wants to curl back under on Apple. You know, Helen, I know that they talk about AMD a whole lot in your chat. Could you talk to us about AMD? You know, why is AMD such a popular symbol? You know, in your chat rooms. Let us know.
You mean AMD?
Yes, AMD.
AMD had a bad news last week because they have issued some corporate bonds, 10-year corporate bonds and 30-year corporate bonds. So it dropped 3%, 4% after they announced this news, and that they are weaker than Tesla. AMD, I didn't trade AMD because I thought once they announced this news, I would just short. I wouldn't go now once I saw this news because they're raising money by issuing corporate bond, 10-year bond and also 30-year bond, corporate bond.
All right. Thank you so much, Helen. Thank you so much on that coverage. You're definitely providing some much needed fundamental analysis here on the show, and we really do appreciate it. Next up on the list is FCX. Let's check it out. Freeport McMoran. They cover the metals, I believe, gold and copper, right, or other precious metals as well. Not much better here, right? Price just dipped under the 200 for the second time here. Well, no, let me see, third time here within the last year. 8 is over the 21. 8 is over the 200. So expect some kind of technical bounce here off of the 21, which is going to be at 38, but expect some resistance at 40, at 41, and 42 on Freeport McMoran. You know, especially gold is considered a safe haven asset. And also the metals, okay, I'm sure will benefit from increases in inflation. However, everything is denominated in dollars, which the dollar is screaming. Okay, let's look at the dollar index here. This is how you know I live in New York for real, because the internet here is just so spotty and just weird. Come on now. This internet is still loading. Or it may be Thinkorswim, who knows, but I cannot get a chart on DXY. Let's see if I can pull it up. Otherwise, give me 1 second. Okay, hold on.
So actually, if you look at gold, X, all this metal, rare metal, or gold, silver, all this, they supposedly to be good once the CPI is getting skyrocketing. But sometimes they dropped, because the whole sector, everything, single sector dropped because systematically dropped because the interest rate. But once you want to buy dip, for example, next week, I would think there is an opportunity to buy dip, maybe Wednesday. So you could consider this kind of this sector, like what does this say, like the colored metal, like gold, also X, FCX. This sector will perform better. Or you can consider Tesla. This is my thought, my 2 cents.
All right. Again, thanks, Helen. Again, we had a problem with the chart loading here on Thinkorswim, but thanks to Bloomberg.com, we were able to get a quote on DXY, and we are challenging again the yearly high of spot goal of 104.99. Right. So mostly a bullish case for some of the metals, but again, as everything is denominated in dollars, it'll kind of muddy the chart just a little bit, right? Okay, so that's FCX. Next on the list is one of my favorite long-term trends. Oh. Sorry about that. Oops, my mistake. Sorry about that. One of my favorite long-term stocks, Salesforce here. I mean, I'll tell you what, out of all of the tech names on the weekly time frame, Salesforce has a chance here, right? You see a weekly MACD cross there. But you went to the 200 and the 21, and you bounced down. Now you're between the 8 and 21 to the downside. 8 under the 200, 21 under the 200, 8 and 21 under the 50. Yeah. Again, expect maybe a possible retest of 200 on CRM, but I'm just seeing more bearishness than bullishness on Salesforce on the longer term time frame. On the daily time frame, looks pretty okay. Again, expect some kind of price support here at 178, but I can see price bouncing between 178 and 190 on the daily time frame here on CRM. But as the case is with the majority of the tech names, okay, that expect price to just kind of be ping-ponging around, but then resolve itself to the downside, there. Okay, so I'm going to get to our other big ticker, okay, for the day and evening, and that is going to be Bitcoin. Okay, Bitcoin. All right. Before I get started, let's do our final reset for the night before we go to our BTC analysis. All right, team. Again, welcome to Brooklyn Traders, your number one source for technical analysis on the stock market. I'm your host, Charles Becco. I'm being joined by Helen, okay, and we are both breaking down tickets here for you with a special emphasis on Tesla and now on Bitcoin. Please follow Brooklyn Traders at www.brooklyntraders.net, YouTube, and Facebook. We are live streaming via Clubhouse, Facebook, YouTube, and Twitch. And if you enjoyed this content, please follow us on YouTube and IG. Also, don't be afraid to hit us up with any donations or any kind of support that you feel is warranted. So thank you, and let's go on with the other analysis. Boom. All right, here we are with Bitcoin, okay? Whew, man. Bitcoin. Man, oh, man. I think right now is a pretty good time to go over like our Dogecoin story, right? I remember it had to be like August of 2020, and we had just like launched like the Brooklyn Traders Telegram group that will eventually be the Brooklyn Traders Discord, right? And I remember specifically just telling every new member that joined, having like a 15-minute one-on-one with all the members, and we were like, hey, if you like crypto, okay, if you had $200, if you had $500, if you had $1,000 to spend, this is what we would do with it, okay? If you're very aggressive, you could take half of that money, throw it into Dogecoin, and then break up 25% into Ethereum, 25% into Litecoin, okay? If you are more conservative, spend the 50% on Ethereum, 25% Dogecoin, 25% in Litecoin, okay? At the time, Dogecoin was 0.003 cents. Ethereum was like between $200 and $300, and Litecoin, I believe, was like $50, $60, give or take. Yeah, we told every single member. I think at that time we had probably 40 members. You know, man, and we had members who had like hundreds of thousands, millions of those Dogecoins, right? And that weekend, and I remember it was like a Sunday night. It was like a Sunday, right? Dogecoin got pumped. It got pumped over a penny and hit as high as 5 cents, right? And I think the majority of the members here cashed out. And then I think Dogecoin went back down to like 2 or 3 cents and chilled there. I think it was maybe even like October, November. I feel like it was around that time. And then in January, right? That's when Elon Musk and I remember December, January, around those months. Elon Musk and those guys were like, oh, Elon Musk and Mark Cuban, like they were like a 1-2 punch, right? Like they came in and just like helped to pump Dogecoin up to 70 cents, as the Jamaicans say, the blood clot. Man. And that's probably one of my biggest regrets in my trading career, not holding on to more of our Dogecoin bags. I mean, literally. I saw it. You know, I think God gave me a prophecy. I believe God honestly put it in my heart. I seen it. I said, man, Dogecoin's going to a penny or two. Okay? And if you've been a Brooklyn trader, you've been around a long time. When I start doing my check-in dance, okay, when I start putting on my chicken suit and I start dancing, stuff happens. Okay? And I believe that was a little blessing from God. And I sold my blessing for a piece of bread. Okay? If you guys do not catch the parallel there, that is just like Jacob and Esau. Esau being the man who sold his entire blessing for a bowl of soup. Man, I really regret that. All right? Now here we are again. And what are the charts having to say about Bitcoin? Let's get into it. Okay, as before, right? See these lines down here? Okay, these are open gaps on the Bitcoin chart. Again, not every gap closes, right? But given the amount of volume that was up here in Bitcoin, we believe, sure, that, could the Bitcoin possibly, kind of hold and stuff? It could. I just believe that it is more likely for us to go down and test 20,000 Bitcoin, 15,000 Bitcoin, and ultimately a price target 13,000 Bitcoin, okay, before we break above 60, 70,000, especially given the influence that the stock market has on the crypto market. Now, I understand those Bitcoin maximalists, they're all like, oh, no, the Bitcoin and crypto is this, yada, yada, yada. Team, here's the reality, okay? the markets go hand in hand. Okay, crypto is a risk asset. Okay, and typically you do see movements in the riskier assets before you see a move in the more conservative assets, right? And so, just based on the price action of the overall market, right? I'm thinking again, the crypto market is going to get an even darker crypto winter. Okay, if you look at the chart here, okay, weekly time frame, 8 pass on the 50, 8 pass under the 21. Actually, we try to get above the 21 here, May, and we had a firm rejection off of that. And if you see the last 2 weeks, there's the 8, and here is the hanging man or shooting star off of the 8 and lower. Over the weekend, again, this is June the 12th, 2022, we have seen Bitcoin down over the weekend between 4 and 5%. Okay, price target. Okay, and I'm looking for a panic, right? Happening one day. I remember. I'll tell you another story. It was March 2020. I don't know if it was the 3rd, the 5th, the 12th, but it was a day when I think COVID was just ravaging, right? And then the market had the craziest drop, like the craziest one-day drop. It was like the climax of the bearishness in the stock market. I believe Bitcoin, okay, went down and hit a low of like 6,900, okay? And I remember the day that it happened. I remember the day I went on Facebook, okay, and I told everybody, I said, team, this is where you buy the dip on Bitcoin. I believe it. You know, I believe it so much that before we go further, I'm actually going to go and I'm going to look for the post for you. Give me 1 second. Hold on. Give me 1 second. There it is. There it is. There it is. Okay? March the 12th, 2020. Okay? If you do not know what the heck I'm talking about, you are not on the YouTube or Facebook or Twitch link, and you should be on there. March the 12th, 2020. Money team, I recommend we start buying some Litecoin, Ethereum. Okay? Crypto price is good here. That was the bottom. Okay? And I'm looking for another bottom in crypto. You know, it's really hard to cap when you post all your thoughts on social media for everyone to scrutinize and to clap if they so choose. Helen, what are your thoughts on Bitcoin and the crypto market as it stands today?
Because they are more sensitive than the stock market. Because when they went up, it went faster, and the percentage was much higher. Because the pool is tiny compared with stock market. Even the market cap is even not compare with, even cannot comparable with Apple, like a single company. The whole industry, the cryptocurrency industry, is not even equal to Apple or one company, global company. So the pool is small, and once the Fed pumping money, they jump up so fast, so quick. Percentage-wise, very high. Also, they are ahead of the stock market going up, but when the Fed is taking money away, they reacted faster and even going down much quicker and much deeper than stock market. The volatility is much higher than stock market. And also stock market volatility is much higher than the bond market. The bond market is more stable because they are bigger, much bigger. They are much bigger, much bigger than stock market. But stock market are much bigger than cryptocurrency. Do you agree?
Oh yeah, for sure. And these are just much bigger games, you know. And yeah, the currency market is like, I mean, with the size of the currency market, right, versus everything else. I mean, you know, if the stock market is the game of CEOs, the currency market is a game of kings, queens, and presidents and prime ministers, right? It's such a bigger game. This is why, you know, this is why the SEC actually wants to outlaw the trading of currencies and Forex by like retail, right? Because it's like the attrition rate is like 93%. Like people just get wrecked. Like there's just so many. Like, and again, listen, if a couple of you guys made the bag on the currency game or whatever, you know what I mean? Whatever. The statistics show that the majority of people just get wrecked who try to trade all that stuff, you know. Here again, the crypto. Here at Brooklyn Traders, right? We have an entire curriculum that goes over candlestick analysis, fundamentals, technicals, all that. 23 class curriculum. Okay, hit us up on the back end if you want to have access to that. But I tell everybody who tries to trade forex, it is not as easy as those YouTube, Facebook, Instagram, and Twitter influences make it seem, right? So here you are. One of the reasons why we started the show at 5 o'clock is because at 6 o'clock you get the futures market opening. Here it is, Bitcoin down 6%. Boop, boop, boop. Okay? Down 6% here. Okay? You see it? Collapsed. Right? Let's look at the Qs. Oh my goodness. Goodness. Look at this. Helen, we're down 1%. Wow.
You see the cryptocurrency went up. They went up from, I think it's -6 to -1. So it jumped back. Is that right?
Let me see. Hold on. I don't know.
I think I watched last time was a 1% decrease, not 6%. It was like 7 or 6% decrease.
Nah, we're live right now. It's 6.7 now.
6.7 now again?
Yep.
Went down?
Yep, yeah, because basically
Ethereum was bad, really bad. I saw Ethereum.
Yeah, we're watching it live right now, so there it is. Again, the stock market, if you've heard me, team, you know, I've always said that crypto was the canary in the coal mine for the rest of the market, right? And so, you know, for me, if I see Bitcoin down over the weekend, I'm expecting some kind of bearish open, and that's what we see here. Again, NASDAQ futures down 1.1%. ES down 0.75%, which isn't, again, it's not like a destruction, right? I mean, by the time we wake up tomorrow, we could be up gangbusters. Who knows, right? But this is down right now. Man, Kisco, you coming in late, brother. You coming in late. So I do have one last request for a ticker. We'll just look at it really quick. I see Ford here, and I don't see anything on Ford. Just another bearish rejection off the 50. Look for Ford to retest $12 and possibly go under on Ford. Nothing to see there, Kisco. Believe your eyes, right? The chart is telling you exactly what's happening. There's nothing here on Ford. Helen, I'm sorry. You got something to say?
Oh, no. I just saw the cryptocurrency went down again. It didn't hold that level.
Yeah, the futures market opened up, and I'm sure a bunch of orders just hit the tape there. So yeah, I mean that's basically it. I'm looking for crypto. I have no idea why Bitcoin hasn't tested 25,000. If you guys don't follow me on social media, my prevailing theory, and this is, you could call this what's the tinfoil hat, flat earther theory, whatever you want to say. My assumption is that there are a lot of Bitcoin whales that are trapped, okay? And they're trapped at these higher valuations at the 40,000, 35, yada, yada, yada. And I think they cannot wait to get out. But the trading is so thin, right, that I don't believe they could dump their shares on retailers. Because, teams, you have to understand what's happening here, right? The big guys sell their shares to us. They try to sell it to each other, but they're too smart. If investment bank A wants to dump their shares on somebody, it's going to be on retail. It's not going to be on investment bank B or C because they're playing the same game. Okay? So they're looking for us to be the suckers. Okay? And maybe if they don't have anybody to dump their shares on, maybe the thing could bounce or something, right? And maybe they could slowly feed the market their excess how can I put this? Supply, right? But this is the only thing that that I believe keeps Bitcoin over 20,000 to 25. They just don't have anybody to dump their shares on. Okay, whatever. Don't come at me on anything because I believe that's just the way it is. And I haven't been wrong. Here at Brooklyn Traders, we've been bearish crypto since. I think we've been bearish crypto since like July of last year. Like even when we kind of pushed to this false high double top here, I came out and reiterated our short and bias point of view on crypto, and that's basically it. Okay. Yeah. All right. So Helen, anything left here before we wrap it up on the show?
Are you gonna wrap up the conference right now?
Yeah. We're done. It's just a short one.
There is an opportunity to buy it. So I think it all depends on what they see. But I would say like it's very complex. It's mixed. If Monday, Tuesday, if they drop a lot, I would say Wednesday will bounce. But remember another 2 times when they announced the rate increase, when they announced their agenda, the market just skyrocketed. They went up like 3.7%, and the second day it just turned around right away, dropped 3.8. So that's crazy. So I would just take a profit if I buy it, I'll go away and then do day trade.
All right, Sabrina, nice of you to join us here. We were just about to wrap up the show. Sabrina, could you introduce yourself to the crowd before we tap out of here?
I just really stopped by to say hello to everyone. How y'all doing? And to also just probably already spoke about it, right? But I'm sure everyone's heard about the Tesla stock split by now.
Oh yeah, we talked about it for sure.
Okay, great.
Yep. And Sabrina, just introduce yourself to everybody so people know who you are.
Okay, I'm sorry. I'm just assuming everyone knows me. My name's Sabrina. I work for Merrill Lynch, the investment bank. I've been supporting various trading desks my whole career. I trade a lot in regular stocks as well as crypto. But we all know that the market is in the toilet right now, and these stock splits are supposed to help them, but I'm not sure. Amazon just did their split, and then they went down even more. Google's next. So if you have some spare change, these are some good companies to get in on the ground level if you want.
Boom. Long term. We like all of the tech names long term, right? So don't hesitate to come in here and just grab a couple shares of your favorites, right? Now that Amazon had its split, so the shares are nice and palpable. Now you have Tesla as well. For me, I'd like Tesla to come down some more, but I definitely like Facebook at this level and lower. So let's see. Let us see. All right, and so team, that's a wrap. I want to thank everybody for being here, and we'll catch you next week. All right?
I'll be on time next week.
Oh, no, don't worry about it.
Join us in the when the market's open. There's a live chat. Yeah.
Yep. So Helen has a live room when the market's open. So check it out. All right. So, all right. Thanks everybody, and take care.
Take care, everybody.